Good morning, traders. This is TonyD from easyMarkets in Sydney. We had another interesting night in the markets yesterday. The risk-on trading that you've seen developing since Monday continued into Tuesday. Dollar yen broke above 110. Yields in the US got as high as 2.17 and the 10 years, and that's significantly higher than we were on Friday, where we were basing around 2.04. So a sharp rise in yields, a sharp rise in the US dollar. You're seeing the euro dollar under pressure, but not as negative as it was on Monday. And in terms of stabilization, definitely some sideways trading came through yesterday as well. So if you're looking at the euro dollar there, you got the basing in at the low 119s, and so far we haven't got really too high. So 120 could be on the cards. What really happens next? 120 probably is going to make or break for the euro. Perhaps we settle down into a bit of range trading as the US dollar pushes back, finds a little bit of equilibrium, or you get potentially that resumption of the uptrend if the US dollar strength that we've had in 2 days can't continue. Now, what's the key thing for the US dollar? A lot of the markets focused on this CPI number. The CPI for the last 5 months has disappointed. So low inflation's become a theme in the US. You've seen that throughout all the concern from the Fed members, the lowering chances of the Fed raising rates in December. Now, any sort of change in that trajectory, so the last 5 have disappointed, a little bit of a bounce back, a little bit of a snapback in terms of that data release, and you could see the US dollar really have a sharp rally here, because all you need is inflation to get the US dollar to rally at the moment. That's the missing ingredient in most economies, actually. So inflation, if it picks up, you should see a sharp rally there. You saw a sharp rally in the pound on the back of higher than expected inflation last night. Similar sort of action can definitely come through in the US dollar across most pairs, but of course we play against the dollar yen as the cleanest way when you're talking about changes in Fed expectations, which is what inflation would do. The Australian ASX here, you can see, has been trading in a range for the last 3 or 4 months now. It is at the top end of that range, so traders asking this morning, are we going to be selling again up here? Look, it's up to you in terms of your risk-reward qualities. I mean, it is the level to sell at, but if it breaks, you've got to be aware that the market can easily make a move for the next couple of months up to 6,000, because after coiling up for a few months there, the market chooses direction. It's more likely than not that anyone who's been playing this range, all the sellers have to get out, and that can fuel that next leg higher. Alright, so stop losses will be pretty heavy in the next 50 points, and so you could see the Aussie dollar start to make a new direction. Sorry, the ASX start to make a new direction. Aussie dollar was bouncing off 80 a few times in the last 24-hour period. Look, nothing really to see here in terms of price action or new direction. The US dollar pressure is definitely slowing down the Aussie's ascent and enthusiasm. But you've seen that, if you're looking at the high yielders out there, the Canadian dollar, New Zealand dollar, Australian dollar, all these are well positioned to extend their rally. Even if the US dollar does well, then probably the Aussie dollar, Kiwi dollar and Canadian dollar will outperform most in a risk-on environment, so stocks remaining strong. Stocks in the US did get those fresh highs in the S&P again, and so we're watching to see if this is perhaps the theme. But really, for the US dollar, the most important thing this week is Thursday. So we will not recall the US sell-off over until we get that CPI number on Thursday, and also the reaction then in the yields. Alright, traders, in terms of what's ahead today and what you'll be looking out for, the 2 major pieces of data releases are the UK wage inflation numbers, wage numbers itself. Those have been volatile in the last little bit, but you haven't seen too much inflation. Wage inflation is a key thing there that markets are looking at. So it's not just inflation actually central banks want to look at. They want to look at wage inflation. So if that's on the top side, if that beats, then the pound can continue to rally. It looks like it's broken technical resistance here, so there's no reason not to be looking for it to go higher. And if the data helps, that can continue as well. Brexit negotiations look like they're going to get an extension. Seems to be a major vote coming up as well, major speech from May in regards to the change in direction. Looks like though the sentiment towards the UK and sort of the Brexit negotiations has turned positive. So the ability for the pound to rally significantly is there, and it's not just the pound. You're seeing euro pound below 90 briefly overnight, just back at that level right now, and pound yen surging higher up to 146. Significantly huge moves in terms of general moves that we get there for that pair. Some of the biggest 2-day moves we've seen in a while. Alright traders, if you want more information about some of these trade setups or what else to be looking at in the market, there is a bit of oil news tonight. Please come through and we can have a little chat on the numbers below. If you're not a member of Easy Markets Active Traders Group and you do want to have access to a dealer like myself or Russell Stanford, you please sign up on the link below. You can get your access there. Also come to some of our training sessions that we do have here in the Sydney office. Thanks guys.